Welcome, dear traders. You're watching a recap of the Asian session. One of the busiest weeks of January has started, with a rise in the Japanese and the Chinese stocks. Meanwhile, investors in Australia and in New Zealand were more cautious, which led to a sell-off in the equity markets. So the main stock indexes slid in the red zone. Let's discuss what made traders wary and how it affected currency pairs. Market uncertainty is now high as the traders are looking for the results of the central bank meetings, namely the Fed, the Bank of England and the ECB. Apart from that, market sentiment was also affected by external events. Speculators are pinning hopes on a quick recovery of China's economy. At the same time, heavy rainfall continued to batten New Zealand, causing flooding. Prime Minister Chris Hipkins called the natural disaster, which has been raging for the third day, an unprecedented situation. Chinese stock exchanges opened with an increase after a long holiday, and yesterday the Chinese authorities announced that they would boost consumption and imports. It's extremely favorable for Australia, China's main trading partner. Nevertheless, investors remain cautious despite such positive news. They are now sitting on the sidelines ahead of new earnings reports and the meetings of the major central banks. They are also aware of the possible difference in the monetary policies of the Fed and the ECB. Several Fed policymakers stressed that the key rate may be raised by 25 basis points this week. The Fed could move to a less aggressive tightening amidst lower inflation, worsening economic indicators, and the mixed earnings reports. The Bank of England and the ECB could hike rates by 50 basis points, according to a Bloomberg survey. It means that other regulators will become more hawkish than the Fed. As a result, the US dollar will lose its main driver, dropping considerably versus its main rivals. So it may extend big losses against the euro, the pound sterling, and even the Japanese yen. Despite all the bearish factors, the United States dollar index climbed higher in the morning. However, its upside potential is limited, although risk appetite is weak now. The situation will hardly change until the Fed's meeting on Wednesday. In the Asian session, the US dollar retreated to a low of 101.70 from 102 points. Shortly after, it rebounded to 102 points, trading the price corridor of 101.80 and 102.00. As the US dollar has been hovering around the 10-month low for several days, it's losing momentum versus the Japanese yen. The US dollar climbed on expectations of an aggressive rate hike by the Fed Reserve. However, this scenario looks rather unfeasible. The yen, on the contrary, is growing amid hopes for a policy reversal by the Bank of Japan. Although the central bank still sticks to an ultra-loose stance, and Haruhiko Kuroda stubbornly believes that prices will stabilize in 2023 amid wage growth. Analysts assure that changes are around the corner. The next meeting, scheduled for March, will be the last for its current governor. A possible candidate, Columbia University professor Takatoshi Ito, recently made a statement, and he assumes that the Bank of Japan should abandon its yield curve control policy. And he also suggested a revision of a monetary policy. And this comment is likely to fuel expectations of a hawkish stance of the Bank of Japan. At the same time, another possible candidate for this post, Yuri Okina, made a speech today together with a group of scientists and business leaders. She called for interest rate hikes, and the yen advanced amid such remarks by almost 70 pips on Monday morning, trading at 129.90. It's now fluctuating in the bullish corridor of 129.20 and 130.30. The bulls are trying to take control of the resistance level of 130.40. It seems that the bears have already run out of steam. So there is a high chance that bulls will succeed. Even so, the dollar-yen pair may touch 130 and grow above 131. Speculators are likely to open long positions around 129 and below, and they are now rather cautious, although they prefer buying on dips. The yen could stay in the range of 128 and 132 until the Fed's rate decision. Commodity currencies kicked off the week on a negative note, while investors are reluctant to open new positions in anticipation of a central bank meetings. The Australian dollar will hardly appreciate. On the other hand, the Aussie remains strong amid expectations of a rapid recovery in China's economy. Perhaps its rally could be facilitated by an aggressive rate hike by the Reserve Bank of Australia because of a soaring inflation. However, the Reserve Bank of Australia meeting will be held only in mid-February. It means that it will be extremely hard for the Aussie to advance against the US dollar. In the Asian session, the AUD USD pair was trading in the downward range of 0.7068 and 0.7122. The price dropped to 0.7076, and the New Zealand dollar also lost momentum, while the stock market is growing on the statements of the government to fight inflation. The kiwi is unable to rise versus the greenback. During the Asian session, the NZD USD pair was rather volatile, moving in the range of 0.6472 and 0.6507. The kiwi sank to 0.6479 due to a stronger US dollar. The main highlight of the week is the Fed meeting. However, it's also crucial to closely monitor the earnings reports of tech companies with a mega capitalization. So, subscribe to our channel and have the latest market news at your fingertips, and don't miss our next video review, and see you soon.